Welcome. In this video, ZBCN coin price uptrend continues. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When we closely examine the chart, it becomes clear that the current price action is progressing in a highly consistent manner within the framework of the Elliott wave theory. In particular, it is possible to observe that we are currently in the second wave phase of the Elliott wave structure. This second wave typically follows a strong and rapid rise in the first wave and represents a natural and healthy correction or consolidation period. Therefore, this phase should not be seen as negative or concerning, but rather as a calm yet strategic stage where the foundations for a future strong uptrend are being laid. Second waves, by nature, help to restore balance in market psychology. After the sudden surge in the first wave, the market naturally needs a digestion, breather, and rebalancing phase. At this point, some investors take profits while others act cautiously, waiting to see where the price will head next. In this period dominated by mixed emotions, the price usually consolidates within a horizontal range or experiences a slight pullback. However, this movement does not signal the end of the trend. On the contrary, it marks the preparation for a strong third wave. Therefore, the market appearing to pause slightly during this second wave phase is actually a very healthy process from a technical perspective, because, by its very nature, the market needs a breather after each rise. Otherwise, a sustainable trend cannot be established, and prices become overly inflated and fragile. But the current chart structure indicates a rather balanced formation. In other words, the market is currently gathering the energy for a major future rally, laying the groundwork for new buyers to enter positions. Second waves always require patience. The biggest challenge for investors during this phase is to keep their emotions in check and continue to see the big picture without being influenced by short-term fluctuations. That's why, no matter how stagnant or sideways this second wave may appear, it actually allows for the accumulation of significant potential in the background. The compressions that occur during this phase, signals of energy buildup, decreasing volume, and falling volatility, all offer important technical clues that the price may make a much stronger move in the next phase. Investors who remain patient during this period are highly likely to witness a sharp upward move as the third wave begins and realize just how strategic their positions were. On the other hand, the fact that the second wave is moving sideways or within a channel also demonstrates how stable the technical structure is. This sideways action indicates that there is no panic or excessive selling behavior in the market, but rather a rational and controlled correction taking place. This ensures that the upcoming third wave will be based on a much stronger foundation, because any rally that starts without a healthy correction is artificial and unsustainable. But a stable and measured second wave like the current one will make the upcoming rally clearer, more determined, and more effective. In this context, patiently observing the process and analyzing the market's direction without making hasty decisions is of great importance, because the real opportunities usually emerge at the end of the second wave, right where the third wave begins. Therefore, investors must act with the big picture in mind, remain disciplined in their technical analysis, and especially avoid emotional decisions during this phase. In conclusion, the current second wave process in the Elliott wave structure, although it may appear stagnant or sideways on the surface, is actually an extremely important preparation period. When the third wave arrives after this process, it typically represents the market's strongest rally and offers significant profit opportunities. But we can't base our analysis on Elliott wave alone. Let's take a look at other metrics as well. Stay tuned. When we examine the chart carefully and in detail, we can see that there is a very strong support level positioned just below the current price. This support level holds significant importance in terms of technical analysis, serving as a critical threshold. This area has previously stopped downward movements multiple times and has even led to strong rebounds. In this sense, this support zone is not only a base where buying pressure intensifies, but also a psychological line of confidence for investors. In technical analysis, support levels are areas where buyers are more active and where selling pressure is met with strong reaction. Therefore, the price staying above this support zone would be a very positive sign for the continuation of the current uptrend or recovery scenario. In the current chart structure, the price seems to be holding just above this area, indicating that the market is closely watching and respecting this level. This suggests that investors consider this zone a strong reference point. The support zone is not just a horizontal line formed based on past price movements. There is also a significant volume concentration in this area. This indicates that investors prefer to buy within this price range, and that as long as the price does not fall below it, the bullish scenario remains valid. Volume-backed levels like this one inspire more confidence than ordinary support lines, as they are supported by actual investor behavior and capital flow. Moreover, the region where this support level is located carries not only importance in preventing a downward move, but also potential for triggering a new upward move. A base forming in this area could mark the beginning of a bottoming formation from a technical perspective. Such structures are often followed by sharp and decisive directional movements. Therefore, the current sideways movement or minor pullbacks should be interpreted as a preparatory phase for a larger upward trend. Maintaining this level offers investors a reassuring environment, especially for short and medium-term trend tracking. Staying above support indicates that the market remains strong, buying pressure continues, and sellers' influence is weakening. This psychological perception can act as a signal flare for other investors and trigger a positive cycle. As a result, the price may find a stronger foundation at the support zone, increasing the likelihood of an upward move. However, testing support levels is often a normal occurrence seen on charts. The price may touch this support level multiple times to test its strength and build momentum for a higher bounce. Currently, the price hovering just above the support suggests that this level is being tested and that the market is trying to confirm its confidence in it. If the support holds strong after these tests, a clear recovery and price action may follow. In light of all these technical signals, we can clearly state that the price remaining above this support zone is a very positive and encouraging development from a technical analysis standpoint. This support level is not just a line, it represents confidence in the market. As long as this confidence line is maintained, the probability of the price moving upward increases. If the market remains loyal to this support level, it may even be possible to test new highs after minor short-term fluctuations. In summary, the support level positioned just below the current price holds critical importance, not only from a technical standpoint, but also in terms of investor psychology. The vortex indicator is a powerful tool frequently used in technical analysis to measure the strength and persistence of directional movements in the market. This indicator provides clear signals to investors, especially when it comes to identifying the direction and continuation of a trend. It consists of two main lines: the blue line, which represents positive directional movement, and the red line, which represents negative directional movement. Crossovers between these two lines indicate a potential change in market direction, while a widening distance between the lines signals a strengthening trend. On the chart we are currently analyzing, the vortex indicator presents a particularly notable setup. The blue line, which represents the positive directional movement, is approaching the red line from below and appears to be preparing to cross it from underneath. This kind of formation strongly suggests that upward momentum is recovering in the market, and that buyers are in the process of regaining control. If the blue line manages to cross above the red line, this would be considered a highly positive signal in technical analysis. Such a crossover indicates that the upward trend is starting to become more pronounced, and that buyers are becoming dominant. When the vortex indicator gives this signal, and it is evaluated alongside other technical indicators, it is possible to conclude that the price may gain upward momentum. The vortex is a trend indicator. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.